Most people believe investing is only for rich people. They think you need thousands of dollars before you can start. Maybe 10,000, maybe 50,000. So they wait. They tell themselves a story. I will start investing when my salary becomes higher, when I get promoted, when I finally have extra money. But here's the truth most people never realize. Waiting is one of the most expensive financial mistakes in life. Because in investing, the most powerful force is not how much money you invest. It is how long your money has time to grow. A small investment started early can grow into something massive, but a big investment started late may never catch up. This is the hidden secret behind wealth. And today, we're going to reveal the hidden math behind small investing. Many people believe a dangerous myth about money. They believe investing only works if you start with a large amount of capital. But that idea is completely wrong. In reality, most wealth is not created by one big investment. Wealth is usually built by many small investments repeated consistently over long periods of time. Think of it like planting a tree. You do not plant a fully grown tree. You plant a small seed. Then time does the rest. Investing works exactly the same way. A small investment today is like planting a seed, and over time, that seed grows into something powerful. But if you never plant the seed, the tree will never grow. Let's imagine two friends, Alex and Brian. Both are 25 years old. Both earn similar salaries. Both dream about financial freedom. But they make one small decision differently. Alex decides to invest just $5 every day. That is about the price of a small coffee. Brian believes $5 is too small to matter. So he decides to wait. He tells himself he will start investing later when he earns more money. At first, the difference between their decisions looks very small. $5 does not seem life-changing. But time quietly multiplies small decisions. Day after day, month after month, year after year. Alex keeps investing. Brian keeps waiting. And slowly, their financial futures begin to move in completely different directions. Now let's break down the numbers. $5 per day equals about $150 per month. That means Alex invests about $1,800 per year. At first, that number may not seem impressive, but investing is not about the amount. It is about the power of compound growth. If Alex invests that money consistently and earns an average return of around 8% per year, something incredible happens. After 10 years, Alex has around $27,000. After 20 years, the investment grows to about $90,000. After 30 years, that small $5 habit could grow into more than $200,000, all from something most people think is too small to matter. This is the hidden power of consistency. Now let's look at what happens when someone delays investing. Brian waits 10 years before starting. Instead of beginning at age 25, he begins at age 35. At that moment, Brian decides to invest even more money than Alex. He invests $200 every month. That is more than Alex invested. But because Brian started 10 years later, his money has less time to grow, and time is the most valuable asset in investing. By the time they both reach age 55, Alex still has more money, even though Brian invested more each month. This is the hidden cost of waiting. Time lost can never be recovered. Many people regret one financial decision more than any other, not starting earlier. When people reach their 40s or 50s, they often look back and realize something painful. They had time. They just didn't use it. They spent years believing their investments were too small to matter, but those small investments could have grown into something powerful. Financial stress in adulthood is often not caused by lack of income. It is caused by delayed investing, because time is the one resource you cannot buy back. Once it is gone forever. So what is the real secret behind small investing? It is simple. Small investments become powerful when combined with time and consistency. You do not need to start big. You just need to start. Investing $50 per month is better than investing nothing. Investing $100 per month is better than waiting for the perfect moment. The most successful investors understand one important truth. The earlier your money begins working, the harder it works for you. Small actions repeated over many years create massive financial outcomes. I give you 3 solution steps. Step 1. Start small, but start today. Do not wait until you have a lot of money. Start with whatever amount you can afford. Even $20 per week is enough to begin building the habit. Step 2. Invest consistently. Consistency matters more than the amount. Set a monthly investment schedule. Automatic investing is one of the best strategies. It removes emotion and builds discipline. Step 3. Give your money time. The most powerful investment strategy is patience. Do not chase quick profits. Do not panic during market drops. Time and compound growth reward long-term investors. Closing message. The biggest financial secret is surprisingly simple. Wealth is not built overnight. It is built slowly, quietly, through small decisions repeated for years. Every small investment is like planting a seed for your future. And the earlier you plant that seed, the larger the tree will grow. You do not need to be rich to start investing, but investing early can help you become rich over time. So the question is not how much money you have today. The real question is, when will you start?